Hey everyone, this is Joe with Beyond the Chart. In this brief case study on Chevron, I'm going to show you how we caught another small wave for a very nice profit, so stay tuned. Okay, so here's the specifics on the trade idea. Let me get rid of the crosshairs for a minute. The details right here are right off of what I post for my insider members on the Trade Ideas webpage. So this is exactly how I put it up there. So on the evening of October 28th, I was looking at Chevron, and here's the chart of Chevron, and here's September, October. You can see Chevron had been in a very big downtrend. It started this counter trend rally, and that was after the market kind of bottomed in here. It firmed up, had this big move here, then it consolidated. And so what I was seeing is, I said I was looking to buy. Note, earnings are out on Friday. And so I think this was like a Wednesday evening. I'm not sure, Tuesday night or Wednesday night. Earnings are out Friday, but before the market opens, but the trend looks strong to me. So I said, I'm looking to buy at 90.13, a break of the prior day high. So what am I looking at here? Here's October 28th. Okay, so what I'm saying is, what I had seen was, this is the 55-day, this is the 21-day simple, and this is the 10-day exponential. So I use the 21, 55, and 233, kind of the Fibonacci numbers for my simple moving averages. This is the 10-day exponential, which is my trigger line. I saw that the short-term and intermediate were aligned and moving higher in here. And then we got this pullback below the 10, but the 10 was still above the 21, and then look how nice and strongly rising the 21 still was. So after the pullback, when I got the close back above the 10, I said, okay, now I'm interested to see if I could catch another wave higher. It looks strong to me, and so I wanted to, not just because at the close and for the open, I wanted to break the high for the next day. That's why I said the high was 90.12, and I said, let's get in at 90.13. That's the break of the high. So the option would be the December 90 call. So basically at the money, the delta was actually 0.48 at the time. Average true range 2.16. The closing bid and asked on the option was this. Initially, I'm saying a stop on 2 consecutive closes below the 10, just to give myself plenty of room. Initial target 94.45, so right up in here. And so what I did was we got in the next day. So here's the entry day right here on the 29th, and now we're in. We bought to open 3 of the December 90 calls at 310 asks. Again, as I've said on these studies, I always buy at the ask and sell at the bid to keep it conservative, okay? So now we're in. So now on the 2nd, on this day right here, our target is hit. And so I sold 2 out of the 3, and it was at 545 bid, okay? So nice profit off of the first 2 in here. Stop on the remaining contract is at break even, which means I don't want to take a loss on the 3rd one. Worst case, I'll sell at 310 on a bid. Okay, because that was the entry, all right? Or a close less than the 2-day low. So here we go, we come on up, and here we exit. Now we're still in, and we don't know how far this is going to go, although I had seen some potential resistance up in here, and we got outside the Keltner channel. And so then on the 5th of November, we got a close below the prior 2-day low. Okay, so here's the last 2 days. And here's the low of the last 2 days. And we got a close below there. So I was out right at the close of that day. Actually, it was 5 minutes before the close. Sold the close 1 at 555 bid. Didn't gain a whole lot from this one because we lost some time premium. And he was pulling back, and whenever it's pulling back against you, they suck the bid and ask on the options. So a total of $715 of profit, 77% of the trade, 5 trading days. Can't complain about that. And really, what did we do? We caught one more small wave. So that worked out very well, and that's an example of getting in and getting out and staying with your trade plan. Hope you found that helpful. Check out the website over at joehentges.net, and we'll see you on the next video.